Okay, so this is the steps I go through to help me pick up the stocks. Okay, so it's actually quite tedious lah, but you know, as you know me, I always believe that you need to do some work to actually get some returns. Um, and I always believe that the more things I do, the chance of me picking up the right stock is higher. So basically, there's actually two parts to this session. So number one is how I pick up my stock. So these are the four steps I use to pick up my stock. So of course, I'll do a demo very quickly. So six tests, I look at charts. I do look at charts for US because later you see my investment strategy for US is a lot shorter term compared to my dividend portfolio. So by the way, hopefully it's clear. Okay, just in case I have anyone new here, it's not that I've switched to become a long-term investor to be a trader. No, so it's just that I have two portfolio. Yes, 70% of my money is actually still in my dividend stocks. Only about 10%, 10% of my money is actually here. Um, to hopefully make some quick gains. Okay, so these are the four step six tests. I look at charts, I look at the news, I look at DCF to help me pick up the stock. Okay, to help me pick up the stock. So I'll do a demo very soon. Then after that, I basically sell options. So later I'll talk a bit about options. Okay, by the way, if do me this favor, if you're totally clueless about options, I don't even know what options is, please help me type a zero. If you know what an option is, but you haven't really invest in options before, please tell me type of one. If you're already currently buying options, please tell me type of two. So by the way, options is quite risky, quite a risky instrument. Okay. I have my fair share of my successes and fair share of failures. In fact, recently I got one stock, which is what we call stuck. Kena stuck or kena assign. Got a sign. Okay, I'll talk about later. All thanks to Trump. So anyway, I'll talk about it very soon. But I won't see myself as losing money because of the stock. Okay, because of how I choose the stock. Okay. So anyway, I'll talk about options very soon. And for options, a few things I need to pay attention to is the earning date of the company and how do I determine the strike price. Okay, so without further ado, let me just jump straight into a demonstration. So I actually use this website called Finviz, okay, to which is own. There are actually quite a lot of websites that do screening. So got Yahoo, got people use I think what TradingView or whatever. So I was introduced to this. I like it, so I'm stuck to it. So of course the problem is a lot of advertising. So the bad bit. So they actually did it called a screener too. Screener. Okay, so I just tap on screener. So Finviz, finviz.com, screener, and I tap on fundamentals. So this is where I can apply almost most of my six tests. Most of my six tests. Okay, so I just put in a filter here. Then I got P and forward PE. So basically PE is just trailing historical PE. That means the earnings is actually based on the known number, known earnings. Whereas for PEs is actually based on next year's earnings. That means there is a element of projection inside. So I go for PE less than under 25. PE under 25. That's my criteria. That's one. Okay, by the way, this is recorded. So I will just send the recording to you all after the session. Okay. Okay, make sure it's recorded. Okay, good. Then after that, okay, so same the six tests. This one I can put quite a few. Current ratio over 1. Then they got some projection earning EPS growth next year. Okay, I just put positive. Okay, debt equity. Okay, mine is less than 2 lah, but down here don't have less than 2. So the max is under 1, so I just put less than 1. Okay. So I got then after that net profit margin. Okay, net profit margin over 5%. Okay, over 5%. Okay. Then they don't have interest cover, unfortunately, and of course cash flow they don't have. So out of 6 tests, I can put actually about 4 here, so which is good enough. Okay. So next thing, because I actually do options, Okay, because I do options. Options market is less liquid than a stock lah. Okay, so basically, I need to go for bigger market cap stocks. Then there are the market that is actually more liquid. The options for the particular stock is more liquid. So once I got filter out, as you can see, now I got 461. I actually sort by market cap now, which is the size. Okay, which is the size. Okay, to actually get stock ideas. Okay. So of course, this is where I get a stock idea. So again, go down this list. So the charts, the news, the DCF, so on and so forth. Okay, so like for example, okay, so down here, I will eliminate certain things. Like for example, for options, by the way, if you got options in one lot is equal 100 shares, 100 shares. So if let's say you got assigned, okay, you have to pay the price times 100 lah. So let's say for example, I buy Meta. Meta now is 589. If eventually I got assigned, I explain what is assigned later. Okay, I had to fork out like $58,000 to actually buy the stock. Also, to me, that is actually quite large. So max I go is 300 lah, or I try to do below 300. Okay, then on the reverse side, if let's say for example, this one $20 over dollars. This is what I call no meat. No meat. Later I explain what is no meat. So generally speaking, I go for at least $70. So the price range to me have to be between $70 to $300. So again, you can see that okay, Meta I will actually filter out. Then okay, Berkshire I'll filter out, so on and so forth. As long as more than 300, I will filter out. But they I don't think they have the filter. Let me just confirm. I doubt they have the filter for price. Okay. Yeah, so they don't have like, unless I pay for it lah. Okay, unless I pay for it. So they don't have like what I mentioned just now, 70 to 300. So I have to do this manually. Yeah. Okay. Then I just one by one take a look lah. Okay, I scroll down like this. Like for example, okay, Alphabet. Alphabet is Google. So we can see we actually look at the charts. So the chart criteria. So let me look at Google. Personally, again, this is personal preference. When I look at charts, I prefer to use Finance Yahoo lah. Okay, Finance Yahoo chart. So down here, what I do is I can type Google. Okay, which is the symbol for Alphabet. And I look at the charts. Okay, so I look at the fire one first. So you can see fire perspective now is actually trading a bit higher. Okay, a bit high. Then if I just look at a 2-year perspective also, okay. So it's probably on the high side, 179 on the high side. Okay, so not say cannot. Generally speaking, not ideal. Okay, later you will see at the end of the day to find the ideal stock. Not easy lah. Based on my criteria, not easy. Okay, if you ask me, this one is okay, still acceptable, but not ideal lah. Generally speaking, I try not to go for stocks already like trading quite close to historical high lah. Quite close to historical high. So maybe this one not to my best liking. Okay. Then of course you actually you can scroll all the way down and slowly find out. So of course, okay, along all this, okay, there are things that I don't like for example, sorry, how come I'm here? Okay, okay, I tap. Okay, I tapped to the next page accidentally. Okay, there are things I don't like for example, okay, Meta I don't like is because it's more than $300. TSM, okay, same thing. You can see it's also trading historical high. Then after that, you have Berkshire. Okay, too expensive for me. Definitely too expensive. Visa a bit too expensive. Okay, so and so forth, so and so forth. Okay, so the other criteria is actually, okay, we talk about news later. The DCF. Okay, DCF. Oh, so I think by now everybody know what is DCF. If so basically DCF is the fair value calculated. It's actually used to calculate the fair value. There's actually one website I use again based on personal preference. There are various websites that actually do DCF. I've been using this website personally when I do my own DCF. It's actually quite close. It's actually called Guru Focus. Okay, Grover, but usually it's easier for me to just type in Google. So I just put DCF, let's say, in this case, like for example, okay, we try Google just now, Google, KGOG, So you can see usually the top one with Guru Focus, Guru Focus, DCF, then I click on it. Okay, so you can actually give the DCF, like for example, in this case, actually not too bad. Google is actually not too bad. You can see that the fair value based on this website is 230, now it's trading at 179. Also, of course, um, it doesn't mean that, wow, like that confirm make money lah. No lah. So it's just that personal preference. So if you ask me, actually Google is actually not too bad. The only thing now is the chart doesn't really meet my criteria. Okay, so maybe I just try one more. Okay, like in this case, why J and J didn't meet my criteria. If I actually look at J and J, okay, so I can just key here J and J. So DCF valuation. Okay, so you can see that based on DCF, J and J is overvalued. So of course, okay, this is why I reject the counter. So down here I actually show 3 criteria. They must pass my 6 tests. Then after that, the charts is not close to historical high and definitely not historical high. Then third is DCF. Okay. Then the fourth one is actually the news. Okay, so basically, okay, I've been doing my work. So basically, if you scroll down, a lot actually didn't pass the DCF. The one that how come it's not here really? Okay, the one that actually meet most of my criteria is actually this one, AMAT, applied materials. Okay, so maybe I just go through. So number one, if you actually look at the charts, let's go back to Finance Yahoo. Okay, applied material is actually AMAT, AMAT. Okay, bear me for a while. Okay, so you can see the chart, not too bad. So at least it's not at historical high. There's actually still some space in between. So I think this is okay. The chart is okay. Then if you were to look at the DCF, so I type AMAT, AMAT. Okay, DCF valuation. So based on DCF, you can see fair value is 264, current price 192. So there's some gap. So actually okay. Again, pass my test. Then the next one is the news. So the news, I just look at Yahoo News. So you can actually click on news. So down here, the news is, I just want to see, is there any very negative news about it or not? Okay, like for example, in this case, you can see that it's not exactly positive. You don't have like very positive news. Of course, if there's positive news, that is a bonus. That's a bonus. But down here you can see that you don't have very negative news. Okay, so of course, if you actually want to be stringent, you say, oh, okay, I only want to have positive news. So then it's quite difficult to find the perfect stock. Not say don't have, but it's more difficult. So down here, my criteria is you just don't see super negative news like, they're going to cut semicon or blah, 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 so on and so forth. So down here, I wouldn't say that they are positive, but I don't see a concern. Okay, so this is how I actually pick up my stock. So the 6 tests, okay, the charts, the news, and the DCF. Then usually what I'll do is I'll just confirm that the 6 tests actually is really pass, just in case Finviz there's some typo errors. So down here in finance, I just go statistics. Okay, so you can see that profit margin more than 5%, 27, so definitely pass. Then you have current ratio, okay, debt equity 35%, which is less than one pass. Current ratio 2.86, also more than one pass. Then if you look at financials, okay, so if you were to look at income, net income, okay, is increasing. It's actually increasing, which is of course something I like. If you actually look at the cash flow, okay, cash flow, operating cash flow, so you can see that, okay, all good, something that I like. Okay, so yep, that is how I basically screen for stocks. So I must say, it's quite stringent. So it's not actually not easy to find a stock that will pass all the tests with flying colors. So far, so far. It's not easy for me to pass the stock with all flying colors. But then, usually the stock buys okay, the hit rate not too bad. Yeah, there are cases I do get assigned, okay, but at least if I get assigned, I know that this stock is actually not too bad. Okay, so I just stop here for a while to see if there's any questions before I proceed to the next part. Okay, let me see. Anybody has any questions? You can type into the chat, or if you want, you can unmute yourself. Anybody at these questions at this juncture? Also, 4 steps. Number one is the 6 tests. I use FinViz to help me sift out. Number two, I look at charts. The charts, the criteria just make sure it's not historical high. Okay, I don't have to be low. It's just that it's not historical high. Number two. Number three, I look at the DCF, okay, under Guru Focus. Okay, the third one. And number four, news. Okay, I see whether is there like very negative news. As long as it's not say very negative, I'm okay. So of course, if there's a positive, even better. Okay, these 4 criteria for me to see for stock. Okay, no questions. No questions. What I'm going to do is I'm just going to share with you another stock that I have found that passed my criteria. Okay, which is PayPal. PayPal, PYPL. Also, you can see it's above $70. If you were to look at the chart, PYPL, PayPal. Okay, PYPL, if you look at the charts, so you can see, it seems like it is actually quite topish. So the reason why I can still accept is because if you actually look at the 5-year, can you see? From a 5-year perspective, it's actually not say very high. So of course, again, up to you. If you actually want to be very strict, if you just look at 2-year, it's actually on the high side. But after a while, you realize to actually find a stock that perfectly pass all my 4 criteria, not so easy, not so easy. Okay, so that's why this one I can accept. Okay, then if you were to look at the news, okay, so this one quite good. You can see very positive news about this company. He's actually into a bit of crypto. If you are interested, you can go and read PayPal, the best stock under 100 to invest in. So basically the analysts actually quite like this stock. Okay, so on and so forth. So at least this one actually got positive news. And if you were to do the DCF, PYPL, okay, so fair value 99, now it's 83, so it's actually still considered undervalued. Can. Any questions? So no questions, I move on to the next part, which is how I actually place my trade. Personally, I actually use the Tiger platform. Okay, so this is my Tiger platform. What I do is I actually do options. Okay, I actually do options. I actually use this thing called the put option. So what the put option does here is this, I'm like selling insurance. Okay, I am the one selling insurance. Okay, take for example, let's say AMAT, or my PYPL for that matter, PYPL. Okay, so PIPL is actually $83, currently $83. What I do is this, I actually sell a put. Okay, so assuming I sell a put, let me choose one that, let's say, for example, 39 days. And, okay, so this is what I call the strike price. I explain it very soon. And let's say, for example, I choose one which is, okay, 77.5. You can see here 77.5. Click here 77.5. Okay, put. Then, of course, if I want that, I just click a sell. So what I do is I can actually, okay, now the market is not open. Okay, if not, usually there's actually a box for me to actually sell. Okay, let me see, I can sell. Okay, you see, I can actually sell. Okay, I can just click on sell. Of course, I'm actually not going to click on that. Click on sell. So after I click on sell, right, then I will actually earn this $98. So one lot is 100 shares. So 98 cents times 100. So $98 will come into my cash account here. So in this platform, I'll actually get $98. Okay, so $98 is confirmed mine to keep already. Okay. Then what happened here is this, I take money, right? That means I'm selling something. What I'm selling, I'm actually selling an insurance. Just for the purpose of those who are actually not familiar with put options. So remember my strike price is $77. So basically I'm selling an insurance that, okay, if the price go below $77.50, okay, at this date, okay, at this date, 20th of December, if the price go below this price, I need to buy the stock at this price, $77.50. So I'm basically selling insurance. Okay. So who will actually buy them? So like, for example, assuming you own PIPL and you're worried that the price will drop. Okay, you want to buy insurance. Then maybe you actually buy a put. So if the stock price go below 77.5, okay, you will actually be able to sell to me at 77.5. So assuming on this date, 20th December, 20th December, assuming the price is $70, I still have to fork out 7,750 because times 100, remember? I still have to fork out 7,750 to actually go and buy the stock. Okay, if the price fall below 77.5, okay? If the price remain above 77.5 on this date, nothing happens, okay? I get to keep my $98. So I actually earn $98, which I already received upon selling. Okay, so this is what I do. So basically, if the price continue to remain above 75.5 up to this date, then after that you get expired. That means my obligation is over after this date. Then I actually get to keep. I actually make $98 out of this whole deal. Okay, clear? Okay, now one thing I will do here is this. Okay, so basically this price will fluctuate also. Okay, this 0.98 will fluctuate also. So usually closer to the date, so assuming, let's say, for example, you can see this one is actually based on 39 days. Okay, this is actually based on 39. So let's say, for example, when we come to 4 days left, at the strike price of 77.5. Okay, just now strike was 77.5. Okay, so about here, then this price will actually drop to, as you can see, about 6 cents. Okay, 6 cents. So usually, if I can make about $70, that means if let's say this price drop to about 20 or 30 cents, 30 cents, then I will just buy already. Okay, buy means what? That means I take $30 to to buy the put, which basically cancel off my obligation. Okay, cancel off my obligation. Okay, then net I make $70. So what I do here is this, I try to, when I sell that I try to make $1. By the way, this is on US. On US, I try to make $1. Then when I sell that time, I try to sell at 30 cents. Okay, then net I would actually make about $70 US, which is about 100 Sing every time I do this. Okay. Any questions? Any questions about the put? So of course, this is definitely not option cost. By the way, for those who want to trade options, so please have a full understanding of options before you do so. Like I said, I have colleagues that do a proper option course. So please also, I'm not here to teach option, but I'm just sharing again my investment strategy lah. So for me, this is how I actually trade. Then I actually make $70 just by doing this. Okay. Anybody, any questions? Again, I just stop here for a while. Anyone has any questions of the option strategy that I mentioned? All good, all good. So BN, is it too complicated? Also, that's what the put option does. Of course, there are various other option strategies. So this is the one I apply. Good, no questions. Okay, if no questions, then I will actually talk about some of the nitty-gritties, some of the details on how I actually apply the option trade. So number one thing here is this. I need to determine what is the strike price. What is a good strike price for me to enter? So this is where I need to look at the charts. I go back to the chart. Okay, like PYPL. Let me just go back to the chart. Okay, finally, something. Okay, so 1 year chart. So as much as possible, I will try to find a strike price which is close to the previous peak. Like in this case, this one, $73, as you can see here. Previous peak. Okay. Or at least the strike price should be at least 77.50, which is the last lowest point. Okay. So remember, so how I determine a strike? So actually the maximum strike price I should go is about 77.5, okay, around here. Okay. And if I can, is at least here, so 73 to 77.5. So this is the range of how I determine a strike price. So remember these two numbers, 73 and 77.5. Okay. Then I come back to my options. So you can see for put options, there are different days. Closer, like you can see 4 days. If let's say I just use 75 as a reference point, 75. So you can see here, the option price is 3 cents. So if I sell, I only make $3. This is what we call no meat. Okay, so assuming I actually sell an option which expired this Friday, strike price $75, I only get $3. We can't even cover the transaction cost. So this is what I call no meat. So like I said just now, I'll try to at least target $100, $100. So I probably need a further date. Like in this case, it probably have to go up to like, okay, maybe 39 days. 39 days. Okay. So I can see like for example 75, I get 57, not too bad. And if I want my $100, I have to go for 77.5. So I do make a decision sometimes. So either I actually either I actually go for this date 39 days, or maybe I just pull back one more week. So like 46 days, for example. Okay. Then maybe I can get about $76. Okay, so yeah, probably I'll take this $76. Then after that, I'm obligated for up to 46 days. Also, this is how I determine the strike price. Can Okay, like for example, AMAT, if you actually see AMAT, there's a little bit more meat, like the way I call it AMAT. So let's look at AMAT. Okay, and again, before we determine a strike price, let's look a bit at the chart. Yep, this is past 1 year. Okay, so it's either here, which is 175, or yeah, I can go for the previous low. Okay, probably about also 175. So maybe let's say 164 to 175 will be nice. Okay, but 164 to 175 would be nice. Then after that, I actually look at the days. Okay, maybe I try 11 days. If I want about $100, let's see what do I get. Okay, so 170, so not too bad. Okay, so probably about down here about 170, strike price 170. Then I will actually get to this trade. I get $93, okay, for over 11 days. Then my obligation is only over 11 days. So that's how I determine the strike price. Okay. And the last thing I need to watch out for here is this. Okay. Again, this is the list. If you want, you can just remember this piece. Is the earning date. So usually at the earning date, okay, why earning date is so special? Because usually at the earning date, there will be a huge price variations. Of course, if let's say, the earning, they usually whether beat the forecast or underperform the forecast. If they beat the forecast, of course, the price will go up. If they underperform the forecast, then the price will come down. Or the price will come down. Okay. So usually I try to avoid taking the risk here, because if the price come down, it can come down very sharply. It can come down by 10-20%. So I have experienced that before. So it's not fun to play with. So I try to avoid the earning date. Okay. And like for example, in this case, if you actually look at AMAT, okay, how to find the earning date? You actually look at the main page, the summary. The earning date is actually 14, which is this Thursday. So I will not buy AMAT until after the earning date. Probably I'll buy on Friday or next Monday for AMAT. And let's look at PYPL. Okay, you can see that the earning date. Okay, then I won't be affected by the earning date. Okay, so that is basically how I do it. I must say that okay, so far the results are quite okay. In terms of number of trades, I must say that the success rate is actually not too bad. I would say above almost like 90%. Okay, what I mean by success rate means I'm not assigned to the stock. I'm not being assigned to the stock. Okay, that means I actually sell the put, then after that up to the expiry date, nothing happened. So I just keep that $100 and be happy about it. So in terms of number of trade, I think 90% is not assigned. But please take note, once assigned, then I have to fork out money. Like for example, assuming if I do this, if I were to, let's say I would take this trade. Okay, I sell put at 170, assuming that on November 22nd, it dropped below 170, I have to fork out 17,000 to buy the stock. Okay, so to me, it's actually also not a loss, because based on how I select the stock, it's actually quite stringent. I have to actually at least make sure it passes the 6 test. I have actually make sure that it's actually not historical high. I have actually make sure that based on DCF is still considered undervalued. I have also make sure that you don't have super negative news. Okay, so if I got a sign, usually if I wait out, things are quite okay. Um, so it's not like, oh, if I get a sign, that means what, I actually lost my 170,000, so $17,000. No, it's just have to hold lah. So have I get a sign before? Definitely yes. I have get a sign before. So recently, I got assigned to one stock. This one thanks to Trump lah. Thanks to Trump. The stock is solar related, and apparently I think Trump is not a supporter of Trump is not worried about climate change. So basically, once Trump won, then the stock price actually plummeted. Okay, it has been a very fundamentally strong stock, so I'm just holding the stock. and see how it goes. Okay, so that is all the sharing I have. I think good timing. Good timing. So about 15 minutes. I'll answer any questions that you have. Okay, good. I see questions coming in. In real-time trading, how much money to fund the account enough to cover if assigned? Okay, so minimally speaking, okay, I can't speak for the rest of the platform. For Tiger, you need to minimum put $10,000. Then you can 10,000 Sing. Actually, they allow 10,000 Sing. Then you can start. This is what they call a margin account. Okay. If you actually want to play options, you have to open a margin account. So minimum is actually putting 10,000 there. So what happened here is this, you allow leverage about four times leverage. So basically, if let's say I have 10,000 there, I can actually buy stock up to, okay, by the way, I have to convert to US. So let's say, for example, I have 10,000 US. I put 10,000 US in this portfolio. I can actually buy up to 40,000. They give four times $40,000 worth of stock. So if let's say I got AMAT, then 17,000, that's 17,000. Then if I get assigned to PayPal, that's another 7,000. Also, it's about 20 over 1,000. That one I'm not too sure. I'm not too sure whether cash account can trade options or not. So of course the leverage, right? You will be informed. So basically, let's say if you don't want leverage, you can see the dashboard is actually quite intuitive. So they will actually tell you, okay, I'm actually now more used to the phone platform. Okay, let me see. Okay, this is the demo account. Also, they will tell you if there's any leverage or not. Okay, so basically they will tell you if there's any leverage. Yeah, so if let's say basically you don't want leverage, right? Then you just make sure you have enough money. Okay. If not, the leverage is automatic. It's not like I have to send for another approval. So assuming that I go and buy Meta. Okay. So in the first place, if let's say I have only 10,000 US, maximum up to 40,000, then I can't even enter the Meta trade. Because if let's say it's assigned Meta, just sounds like almost 60,000, I have no money. I can't even put in my Meta trade. Also, they will actually have this function. Okay. And if let's say come to a point whereby I 10,000, max $10,000, right? Then after I get assigned, I have to pay like 30,000, for example. It's automatic. Then I will automatically have to borrow 20,000 from them. So they won't even ask you once if let's say you get assigned. Okay. So that's why it's actually quite risky. Yeah. So Prem, thanks for answering the question. So you need to have a margin account. Then from Steve, based on strict. Okay, so how many put options I can buy is usually limited by my funds. Okay, limited by my funds. So they have a few criteria. One of them is liquidity. Okay, they have this thing actually called liquidity lah. Then they'll actually tell you, are you actually safe, not safe, so on and so forth. So generally speaking, when I come to the point whereby it's actually say high risk already, I'll stop. Like for example, like I said, I try as much as possible on the assumption that if let's say all get assigned. So let's say I got 10,000. If all get assigned, it's actually 40,000. Then I try not to buy put option that will hit the 40,000. That means, okay, maybe I'll just buy AMAT. If I hit is 17,000, I buy PYPL. I hit is actually 8,000. So that is 25. Then I buy something that's probably another 15,000 and three put options. So that if, let's say, really sway, all three get assigned, okay, is still not so bad. It's still within the range. Okay, the problem here is this. If let's say, for example, assuming you can only buy up to 40,000, then after that you all got assigned, then after that it's actually 40,000. Then assuming the price continue to drop, right, then you actually hit forced sell. You will actually be forced, will actually do forced selling. Okay, also, so then you won't be in a nice position. So basically, if you actually want to do this, you just track this number. Lor. They have this called a restate. Oh, then they will tell you, okay, I think once you left only like about 15, 16%, or then they will say it's high risk, then you probably want to stop already. Okay, if everything is good, so thank you so much. So that is all we have for today. So it's recorded. And again, if you actually just want to quick recall, is I just show the slide one more time. So my criteria, this 6 test chart news DCF, and earning date. I want to buy. Make sure it's not within the earning date, and the strike price I use chart to determine. Okay. Okay, good. Nothing. Thank you so much. Yeah, I will hold another clinic on 18 next Monday. Next Monday, there'll be another clinic. So that one will be hosted by Xiong Yo. Hosted by Xiong Yo. Then he will again share with you his strategy. So thank you so much. Have a good evening. Okay, see you. Bye-bye.